Hi, everybody. It's me, Crystal, the insurance broker. So sorry, I started this this live so late because I was in a language class, and I had to run from my language center all the way back to my house just to get everything set up. So I do apologize if you were sitting around waiting for me to give you a little bit more info about the changes that are happening in 2026 for Medicare Advantage and ACA, especially ACA, since ACA is the big one that's being talked about in Capitol Hill and is part of the federal government shutdown. Okay, so let's get started. So let's go here. Let's see. Okay. Okay. So now we're able to see it. It is called Health Insurance Uncovered, Your Questions Answered. So this is all things Medicare Advantage, ACA for 2026, as well as some other tidbits that you might need to know during the government shutdown. Okay, so just a little bit more about my background info. Hi, I'm Crystal. I'm Crystal, the insurance broker. My business is called Crystal Insurance. And before I was in insurance, I was a previous school teacher in South Korea for about 10 years. And then afterwards, in 2022, I became a licensed accident and health insurance agent, as well as life agent for 25 states. You can see them right over there or right over there. And I have my AHIP certification. What AHIP certification is that I have a certificate that says that I can talk to people who have Medicare Advantage or standalone prescription drug plans about those particular policies. And so I've had my AHIP certification from 2023 all the way up to next year, 2026. And I have my FFM Marketplace certification. That means that I can talk to people about the Affordable Care Act policies that are within healthcare.gov or on Health Sherpa. And I've been doing that since 2024 up to the upcoming year, 2026. Also keep in mind that, I am self-employed. You want to support me and support my business and the things that I do so I can help serve my clients a little bit better, you can definitely go up to the upper left-hand corner and scan the QR code and give me buy me a coffee. That would definitely help me and my business. And you'll be supporting, not just me, but other people who do business with me. So thank you, thank you, thank you, thank you, thank you. Obviously, this is an educational event. You do not have to do this if you don't want to. Just keep this in mind. You do not have to do this if you don't want to, but it's a good idea if you want to support me and my business and my clients to give me some love and buy me a coffee. Okay. And I am contracted with like national carriers within the United States for accident, health, and life insurance. Okay. So basic info. What do you want to know? What's happening in 2026? What do you want to know? If you're over the age of 65 and have a Medicare Advantage policy, now until December 7th is the annual enrollment period. So, agent, to make sure that you're on the right policy for 2026. So this is the time right now. If you have a Medicare Advantage or a standalone prescription drug plan. A good time to check with your insurance agent, if you have one, to make sure that your needs are being met for that particular time. Okay. And if you're under the age of 65 and you have an ACA policy, November 1st is the time that open enrollment will start, and it ends on December 15th. So it's from November 1st through December 15th that you have to check your ACA policies for 2026. Now, keep in mind, this is what's being argued in Capitol Hill right now. Like right now, does the government keep the Affordable Care Act subsidies, or does the government not keep the Affordable Care Act subsidies? If the government decides to keep the Affordable Care Act subsidies, then your ACA premium should be very, very low. You should see the same as last year as far as your insurance premiums. If the government decides not to save the subsidies, then you will have to decide with your insurance agent or broker about what other avenues you want to take to make sure that yourself and your family is covered health-wise getting into 2026, okay? And another thing I would think of is that if that does happen, you should be thinking about a fixed indemnity policy. And what a fixed indemnity policy is it covers hospital, surgery, diagnostics, doctor's visits, and some prescriptions. And what an indemnity policy does that's different from traditional health insurance is that you would let the insurance carrier know that you would have to use your coverage, and they would send you a claim form to fill out. You fill out the claim form and attach the medical bill to it, and then the insurance carrier, will give you the income so that you can pay for those medical bills yourself. In traditional insurance, it's the opposite. The clinic or the hospital wouldn't bill you. They would bill the insurance company, and then you would pay a copay or cost share or both. With an indemnity policy, the insurance carrier would pay you so that you would pay for your own health insurance coverages, okay? So if that happens and the subsidies are not approved or are granted in Capitol Hill right now, I would say the best idea would be fixed indemnity policy, okay? So you want to definitely check with your marketplace agent to see if you're still on the right policy for 2026. And then, given what I just said, what's happening in Capitol Hill, if things go south, make other arrangements to go where you need to go. And then if things are favorable, then just making sure that the ACA policy that you're on fits your needs, or if not, change it. So the big map of what it is that we're going to talk about, and we're going to talk about each and every single one of these. So since I'm dealing with a younger crowd, I'm going to go with this section. It says, why should you check your ACA policy every year and how to lower copays? Also keep in mind that if you're coming in to see me, if you want to support me and my business and help me with my clients, definitely you click on or scan the QR code into your phone to help buy me a coffee. It's not necessary. This is an educational event. It's not necessary at all. You don't have to if you don't want to, but it would be a really great help if you want to support me and my business. So thank you very much. So the next topic is why you should check your ACA policy every year and how to lower copays. Let's see. Why should you check your ACA policy every year? The premiums could have gone up, especially now in 2026. There is a change in subsidy, or there's a fight about the subsidy, so you definitely want to check this year for that. The summary of benefits could be different. What that means is that you may like a specific policy, or your policy was okay back in 2025 or 2024, but now what's listed within that policy could have changed, like inpatient hospital copay, outpatient hospital copay, the deductible amount, the amount that you have to pay to see your doctor, that copay. So things might have changed or will be changing in 2026 when it comes to the summary of benefits. Your policy could have been changed without your consent. Actually, I've been seeing a lot of this. In June, July, of a couple of people looking up people's ACA accounts to try to write them into fraudulent policies. So this year, you definitely want to check that, because you don't know if your information was used fraudulently, and you want to check to make sure that your policy is still your policy. I have to keep it real, that of what's happening on the ground. So your policy could have been discontinued. Certain service areas maps could have been redrawn, and your zip code or your area could have been one of the places where it was drawn out. So you want to check with your insurance agent or broker to make sure that your policy is still within your zip code and your service area. So how to lower your deductibles and copays? If you want to go with the ACA policy, everything's fine, and you're like scared at the fact that the deductible is around like $1,000 or more, and the copays are like around $75, $80 to actually use your insurance. So how can you lower that? Let's get into it. Consider getting a fixed indemnity policy which covers copays and coinsurances for hospital surgery and doctor's appointment. Even though I did initially say, if you don't know where in Capitol Hill it's going to go, whether or not the subsidies are going to be kept or whether or not the subsidies are not going to be kept, it's always a good idea to have a fixed indemnity policy, because the deductibles in an ACA policy are extremely expensive, as well as the co-pays and co-insurances. Who has that type of money to pay for that? So a fixed indemnity policy, because the insurance carrier pays you and then you pay for those debts, it would offset a lot of that cost so that you personally don't have all of that cost coming into your pocket like that. So do keep in mind of getting a fixed indemnity policy so that you can make it a little bit more affordable in your household and for you as well. Excuse me, I'm having to make sure that someone knows that I'm on so that I can get a cool shout out. Okay. So thank you. So yeah, definitely think about getting a fixed indemnity policy so that you can offset your ACA costs so that you're not coming so much out of pocket. Okay. If you work in specific industries like construction, electrical, HVAC, really like industrial things, and so it's highly possible that you can get hurt or injured on the job, whether you break an arm or you break a leg. Consider getting accident insurance. Accident insurance is the same as a fixed indemnity policy. It just covers for specific injuries like broken bones, accidents while on the job, et cetera, et cetera. So it's policy, but it covers strictly for accidents. You definitely want to talk to your insurance agent or a broker about that so that they can, show you a brochure about what is being offered that they are able to offer to you. But typically that's what it is. And it's typically the accident insurance, not a little bit less expensive than the fixed indemnity, because the fixed indemnity is typically around $40 to $50 or even $60. The accident insurance tends to be around $20, $30, or $40, depending on the carrier that your insurance agent or broker would be using, okay? So if you're working in these types of industries like construction, electrical, HVAC, definitely consider getting accident insurance so that you're covered for bumps, bruises, broken bones, etc. Also keep in mind that some ACA policies have high deductibles, like I said before, around $1,000 or more, like I said before. So try to enroll in a policy that negates your deductible at slightly a higher premium. This point, when I made this PowerPoint, with the intention of the ACA subsidies being saved. So if the ACA subsidies are saved, then you can search around and shop around on Health Sherpa, on healthcare.gov, with your agent's help, to find a policy that will lower the deductible as much as possible, as well as lower the copays and lower the co-insurances. Maybe it means changing your metal level. So maybe right now you may be at extended bronze and you may have to go to a silver metal plan, or maybe you're at a silver plan and you may have to go to a gold or a platinum plan. So definitely look around the different metal levels and find a ACA policy that works for you, that would lower the deductible and lower the copays and lower the co-insurances. But keep in mind, it will be at a slightly higher premium. If you were to do that, I would say it could be maybe at 100, 200, depending if you're talking to a really decent agent, or if your agent's pretty solid, then it could be around 100, 200 premium, or it could be maybe 300, 400 premium. So definitely check around and I'll see. So next section, how to protect yourself from loss of Medicaid if it happens. We're in it right now. Not to laugh, really not to laugh, but we are so in this right now. I mean, with the SNAP benefits being removed, we're definitely in it, aren't we? So if you want to know how to protect yourself from loss of Medicaid, loss of SNAP, this is what you have to do if this happens. Now, this is going from a health insurance perspective, but there are some points that you might need to know that will hit on some social things as well that could help protect you now if this does matter to you. Okay, so what can you do if you lose your state Medicaid, right? Also dealing with SNAP as well. Okay, if you're on state Medicaid and you happen to lose it, there are a couple things you can do depending on your insurance group. If you're on the Medicare side and you have Medicare A, B, D, right? And you happen to have been on a dual special needs plan, right? You're okay for the end of the year. As far as December 31st, you can still stay on your policy, that's fine. It isn't going to change. But in January the 1st, 2026, it's a good idea to opt for a Medicare Advantage Part B Give Back plan, right? The Medicare Advantage Part B Give Back plan is a policy where the insurance carrier pays for a portion of your Medicare Part B premium. Because the first thing that you're going to see if you're on the Medicare side is that you have to pay your Medicare Part B premium, which will be $206 in 2026. So the first thing you want to do in January the 1st, 2026, would be to lower and to get on a Part B give back plan, which the insurance carrier will pay a portion of your Medicare Part B premium so that you're not paying so much of that Medicare Part B premium entering into 2026. If this is something that you want to do, you do have to change your policy in annual enrollment period. It's a really good idea, because if you change your policy in annual enrollment period, which is now, then your start date on your newer policy would be January the 1st, 2026. So you would be able to lock in that savings. Also keep in mind that the insurance carrier, if you do choose a Medicare Advantage Part B give back plan, the insurance carrier needs about 2 or 3 months to get in contact with the Social Security Administration so that the Social Security Administration knows that the insurance carrier is paying a portion of that Part B premium. So that maybe by March-ish, you would have that savings there, okay? At the same time, you want to use the income saved on the Medicare Part B premium to apply for a hospital indemnity policy to lower hospital and surgery copays. So if you were on a Medicare Advantage dual special needs plan, which was both Medicare and Medicaid combined, and you were getting like full Medicaid, where your copays were at 0, you're going to be feeling the copays after maybe month 2 or 3. If you kept your policy during December 31st, that's okay, it would end. But then if you were to have kept it by month 2 or 3, you would start to feel the co-insurances and co-payments. So if you change your policy to a Part B give back plan and kept that savings and use the savings to get a hospital indemnity policy, you would be able then to, if you had to go to the doctor, the hospital, and had to have surgery, then that amount wouldn't be as expensive to you, okay? Because you're kind of still used to that $0 copay in the policy, but now you would be getting some sort of additional savings in the hospital indemnity policy instead. Now, because people are having that pain in the government right now for the lack of the SNAP benefits, if you're over the age of 60 and need food, use your phone and use your QR application to scan the QR code at the top left corner of the screen to where you can apply for the commodity supplemental food program. This is for people who are over the age of 60 and need immediate food assistance now. So you would just scan the QR code on your phone and see about the commodity supplemental food program so that you can get some food help pretty soon, because I know that the SNAP benefits are starting to be taken state to state, and you're like thinking, how in the world am I going to feed myself? If you're over the age of 60, definitely apply for the commodity supplemental food program. Or if you know of somebody who's over the age of 60 and they need food assistance, then definitely have them apply for the commodity food program. It is there for you to have. while you are, waiting this whole situation out. And if you're under the age of 65 and you lose your state Medicaid, you can apply for a fixed indemnity policy. Like I said before, with the ACA policies, fixed indemnity policies provide income for a wide range of medical costs. So it would be a good idea to look into them further. If also the fixed indemnity cost of around $40 to $60 is just a little bit too expensive, you can definitely speak to your insurance agent or a broker if they have anything at your price point that would help with health insurance coverage, like things like health matching accounts, health savings accounts, also membership to like discounted doctor's appointments or other things that you want to do that you have to do. It's definitely available if you definitely talk to your agent or broker, okay? So like I said, if income is an issue, there are other products you could use, like membership savings cards or health savings accounts. So definitely look that over with your insurance agent or broker. And also, because I showed for people who are over the age of 60, if they had food insecurity, to scan their QR code to apply for the commodity supplemental food program. There isn't anything similar to that for people who are under the age of 60. I would definitely check your State Department Health and Human Services to see what other options there could be for food and for food help in that case. So definitely my heart goes out to everybody who's in that type of situation. I can only imagine, but it will get better, and just hope and pray that it will get better, okay? So let's move on. So we've talked about why you should check your ACA policy every single year and how to lower copays and how to protect from loss of Medicaid if it happens. But there are a lot of policies now that don't have dental at all, don't have dental, don't have vision. So where has all of the dental gone? Let's see. Where has all the dental, vision, and hearing additional coverage gone? Well, for Medicare Advantage policies, vision and hearing coverage is still there, but dental has taken a drastic hit in 2026. We actually saw this in 2025 with less of a comprehensive package for dental specifically in year 2025, which now is over because we're in annual enrollment period for 2026. But in 2025, yeah, we definitely saw with some specific carriers not offering a comprehensive dental package. So that's definitely the case. And obviously through ACA doesn't necessarily cover dental within their policies as well. It may be vision. You may have a vision coverage, but not so much dental. So if you are over the age of 65 and you're on a Medicare Advantage policy, but you still need comprehensive dental coverage, it would be a good idea to get a standalone dental policy, especially if you need to do extractions, crowns, fillings, any type of oral surgery, bridges, dentures you need, or even dental implants. It's the idea to get a standalone dental policy. Standalone dental policies right now typically range from around $30 up to like $60 more or less. And most standalone dental policies do cover dental implants. If that's something that you're interested in, you definitely want to check with your insurance agent or broker to see what percentage is being covered for type 3 comprehensive dental. and kind of make your decision there. And like I said before, standalone dental does cover dental implants. For ACA policies, consider getting dental, vision, and hearing coverage. It's a good idea because those additional coverages are not covered in most ACA policies. Typically, a dental vision combo is around like maybe $40, depending on which carrier your insurance agent wants to look at. But that can be covered if that's something that you need to have covered, okay? So if you're under a Medicare Advantage policy and you want to know what the changes are in 2026, right? Let's see. What are going to be the changes that you're seeing right now as of me talking to you? Part C changes in 2026. Area shrinkage. Yeah, we're seeing it. I'm seeing it now. Like there's not a lot of carriers in specific zip codes. And those who have policies in specific zip codes, it's like not so many policies in that zip code. So definitely check with your agent or broker to see if there are any major changes to your policy or in your area that you need to be aware of. The second one is lessening Part B reduction policies. If you're going to do a Part B give back policy, if you have original Medicare, if you're thinking about doing a Part B reduction policy, you definitely want to check that Part B reduction policy summary of benefits, because the deductible, inpatient copay, outpatient copay, specialist copay, no non-routine transportation, and lack of over-the-counter benefits may have impacted you or your area in regards to Part B give back policy. So you want to check. You really, 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 really want to check. As of 2025, we didn't see so much in medical deductible, higher copays of inpatient copays, higher copays and outpatient copays, higher copays and specialist doctor copays. We didn't see that in 2025 and 2024 either, but in 2026, yes, we are starting to see that. So if you're thinking about getting a Part B reduction policy, a Part B give back policy, where the insurance carrier pays for your Medicare Part B premium, you definitely want to check the summary of benefits to see where the give and take is going to be, okay? Just letting you know. Say, so that somebody told you, just so you know. Medical deductibles are definitely in Medicare Advantage prescription drug policies. I'm starting to see medical deductibles in most areas of the states that I work in. Do be aware of that. And if you're thinking about getting a MAPD policy, do consider getting a hospital indemnity policy if you have the income to do so, so that you're lowering the hospital inpatient copay and lowering or negating the surgery cost for the outpatient surgery costs, for sure. Because medical deductibles, what I'm seeing in some specific policies, it's ranging from like maybe around 500 medical deductible and up. And in some cases, I'm seeing in some zip codes, I'm seeing maybe 375 medical deductible, but in most cases, it's 500. So you definitely want to check that. Lower dental benefits from preventative dental to comprehensive coverage up to $1,500. Yeah, this is across the board in Medicare Advantage policies. Only preventative dental that I'm seeing mostly, or if it does have a benefit level for comprehensive, no more than $1,500 if you're under a dual special needs policy, then $25, maybe $3,000 if you're lucky, if you're in a zip code that offers $3,000 for sure. Preventative dental is as follows: cleanings. Majority of the summary of benefits will just show cleanings or periodontal maintenance. Those are the only two. And maybe throw in a x-ray or dental exam, right? Maybe throw those two in, but cleanings and periodontal maintenance, depending on the summary of benefits, is what we're seeing in 2026 from comprehensive dental, around 2,000 average in 2025. Okay. A lot of non-routine transportation. A lot of no non-routine transportation. In the past, 2025, 2024, yes, non-routine transportation was on most MAPD policies. Now, no. If you need any help in getting that type of service and you happen to be on original Medicare, I would say get in contact with your local senior center, right? And each county has, I think, one local senior center who does do some type of transportation work for the people in their area. So you want to check with your local senior center if you need non-routine transportation, so that your local senior center can arrange transport for you. So there is an alternative to not having non-routine transportation in your Medicare Advantage policy. You can get in contact with your local senior center for that. Okay. Not a lot of over-the-counter benefits this year getting into 2026. If you need any sort of help or any sort of type of prescription drug help, definitely you want to, if you are over the age of 60, if you're over the age of 60, you want to scan this QR code that's located in the upper part of your screen there, and you can apply for what is called federal extra help. If you have prescription drugs that are just way too expensive, you can scan that QR code on the upper left-hand corner of your screen, so that you can apply for federal extra help, which would hopefully cap your prescription drugs at $5 and some change for generic drugs, and $11 and $12 and some change for branded drugs. So if that is you and you need to save on your prescription drug plan, on your prescription drugs, then you want to scan that QR code to apply for federal extra help at the Social Security Administration's office, okay? And if you are under the age of 65 and you need cheaper prescriptions now, you want to scan that QR code as well. That will take you to GoodRx. One of my colleagues called Matt gave me information about an alternative RX coupon policy. So as I have more of these webinars, I will be telling you more about that, and you can cross compare. But as of right now, if you want to scan your QR code, you can, so that you can get cheaper prescription drugs with GoodRx, okay? So what to do to protect yourself from these changes, right? You definitely want to speak to your current insurance agents for any updates regarding your plan. If you don't have an insurance agent, at the end of the webinar, you can scan my personal QR code to talk to me later. But if you already are working with an insurance agent, by all means, talk to your insurance agent about these changes around you, all right? And also check to make sure that your insurance policy is updated, all right? Do have a meeting and go over your current policy to make sure that it meets your needs in 2026. Like I said before, there are a lot of changes happening on the under 65 market with ACA, over 65 market in regards to Medicare with the shrinking of the areas. So you definitely want to get in contact with your insurance agent just to make sure, you're okay and your family's okay. Okay. And if you need to get something done with your teeth, considering getting a standalone dental policy, if your plan doesn't offer comprehensive dental coverage. And if you have problems with like non-routine transportation, et cetera, you definitely want to use senior centers. Senior centers are there locally in your area. They do have food help, Meals on Wheels. They do offer non-routine transportation and other social services for seniors. If you're under the age of 65, I would say definitely get in contact with your state Department of Health and Human Resources to see what other services that are available to you that is available. Unfortunately, it's like a little bit tough to find, but definitely check your local Health and Human Resources office to see if they can offer you more help that way. Okay. And like I told you before, if you're over the age of 60 and you're having food insecurity now, you want to and apply for the comprehensive supplement food program by scanning the QR code with your phone and applying for the commodity supplemental food program. Okay. Okie dokie. So let's see. So yeah, like I told you, where to go to get prescription drug help, the federal extra help at the Social Security website, and also you can use GoodRx. If you need those codes again for the federal extra help, here's a QR code again. If you need to scan it with your phone and apply for the federal extra help at the Social Security Administration, as well as if you need cheaper prescription drugs, you want to scan that QR code to check for cheaper prescription drugs on GoodRx. One of my colleagues named Matt gave me another option that is called Cheaper RX, and I will be linking that information in some upcoming webinars that I do. So don't delay. There are other places where you can cross compare costs for prescriptions. If you're under the age of 60, or even if you're over the age of 60, GoodRx or Cheaper RX are good alternatives to use. Okay. And if none of those work and it's just really expensive, really very expensive, both if you're over the age of 65 and or under the age of 65, you can ask your doctor for prescriptions for manufacturer's coupons. They have to give it to you if it's a really expensive drug like Forxiga, Eliquis, Trulicity, Jardiance, etc. So if it's really expensive, you can ask your doctor for manufacturer's coupons and they have to give it to you. Okay. So the biggest one, especially if you're over the age of 65, under the age of 65, and you're just getting calls after calls after calls after calls after calls. Why are you being called, right? Is this legal, right? Let's get into it. Why all the darn time, right? Well, you're most likely being called by call centers due to you either clicking on an advertisement and or filling out a form to contact later from one advertisement. The place where you probably filled out the form, shared your information with their affiliates, in which that affiliate shared your information with their affiliates. As of right now, this is still legal. There was an attempt to make this illegal through the one-to-one rule by CMS, but unfortunately in 2025, when that one rule was supposed to be enacted, what the one rule was that if you were to get in contact with someone about an insurance, it only had to be for one person or for one business. And that business was the only one to get in contact with you. But now that one-to-one ruling was reversed in early of this year or latter, in the early part of this year. So the regular TCPA rules apply for right now, okay? Which is what you are reading right now that I'm telling you about. Is it legal? Yeah, it is. If you fill out a form for insurance help, even if you are on the do not call registry, an entity has a right to contact you if they have your personal information and you put it in there. They have at least the right to call you for at least 3 months if you do not call. And if after 3 months, if they can't get a hold of you, then they have to not call you again, okay? Also, when you go on websites, they specifically ask about your privacy and agreement to share data. So when you're looking on websites, your privacy matters. Whom do we share your data with? These affiliates. That's how they're getting your information, because you're saying accept to all when you're looking at these websites. And because you're saying accept to all, then they're getting your data that way as well. And that data is being cross-shared and cross-shared and cross-shared. And yeah, it is definitely legal. So what is the TCPA Act? The general information on the TCPA Act is a person cannot call before 8 a.m. and after 9 p.m., your local time. So if a business or a entity like me tries to call you before 8 a.m., you can talk to the Federal Trade Commissions about that. If a business or an entity like me tries to get in contact with you after 9 p.m., you can talk to the Federal Trade Commission about that. We are licensed insurance agents. So if you were to get in contact with us about that, then obviously we have a lot of explaining to do and a lot of retraining to do through our agencies or through the multiple carriers that we have. So it would hurt us a lot if you did that. So yeah, if that is the case, you definitely get in contact with the Federal Trade Commission. If you list your number as a do not call, they cannot call you. Now keep in mind, if you filled out a form and you use the same number that you listed your do not call under, that business that you filled out a form for has a right to call you for at least 3 months. Keep in mind that. Yeah, you can't be robocalled or given automatic messages. Yes, that's the TCPA Act. Assurance IQ was closed down because they were involved in robocalling and automatic messages on multiple occasions. So now it's shut down. So yeah, no, the TCPA Act strictly prohibits being robocalled or given automatic messages. So what are licensed agents supposed to do? So you get in contact with a licensed agent or a broker like me. If they're really honestly legit, what does a legit, agent or broker supposed to do? Well, first things first, a licensed agent or broker is supposed to state their name, their title, that the call is being recorded, and a third-party marketing disclaimer. If this is over the age of 65 and this was a solicitation or a call about Medicare Advantage or standalone prescription drug plan. Keep in mind that as a licensed Medicare insurance agent, I do not offer every plan available in your area. Currently, I represent organizations which offers products in your area. Please contact Medicare.gov, 1-800-Medicare, or your local state health insurance program to get information on all of your options. If we don't say that within the first 3 to 5 minutes of the call, we're in trouble. We're in trouble with our agency. We're in trouble with the insurance carriers that we're contracted with. So we're licensed, legit agents, brokers that have multiple contracts with multiple carriers. We have to say all of that within the first 3 to 5 minutes. Okay. They have to state the scope of appointment to you. If you're under the age of 65, that's a CMS agreement, right? And the reason being is that before an agent or broker can even give you a quote on certain things or ask or kind of suggest which insurance product is good for you here, there, or anywhere else by name, which means insurance carrier name and plan policy name, they have to get the scope of appointment filled and signed, which is detailing the nature of the call or the visit, what's going to be discussed, et cetera, et cetera, et cetera. Okay. If you agree to the scope of appointment or CMS agreement, if you're younger, they have to obtain your Medicare ID number or Social Security number in order to complete your enrollment. If this is a Medicare Advantage policy rewrite or Medicare or a standalone prescription drug policy rewrite or a Medicare Supplement policy write-up or a ACA policy write-up, we wouldn't have to have your personal identifying information to write those policies. That's just something that we have to have. And in certain cases, if you're getting any other additional coverages like dental, fixed indemnity policies, hospital indemnity policies, final expense, if that's something that you want, we would also need to have your banking account information so that those premiums can be paid out. That's just something that we have to have to do our jobs as insurance agents and insurance brokers, hand on heart, like that's things that we have to have. I wish it was something that, would make it easier. And I think nowadays, insurance carriers are now pushing out personal URLs to where if you're tech savvy, if you want to put in your own personal information for your product search, then you can do it. That's what's kind of happening in the market right now. It's kind of shifting from tele sales to maybe getting into more personal URL use. But as of right now, if you're calling an agent or a broker over the phone, or an agent or a broker is coming into your house, those are the things that we have to have in order for us to do our job. Okay. So if you're getting an additional policy like dental or something else, like I said, they are required to get your credit debit card information or your banking or routing number to finalize the purchase of said policy. Okay. So what is the scope of appointment and or CMS agreement? Why is this so necessary? The scope of appointment and CMS agreement needed to write additional products or ACA policies are agreements where the agents disclose what will be discussed during a sales meeting, or what their roles are in the meeting, and how you don't have to get to agree to the scope of appointment or CMS agreement. This is just a catch-all agreement allowing the agent to look up policies on your behalf and talk about policies on your behalf. If we don't have the scope of appointment or CMS agreement, we can't really help you in it. We can give you general information like this if you need types of general information like this, but we can't get into anything specific or carrier specific, policy specific if the scope of appointment isn't filled out. Okay. So the final thing, what is final expense? What are the benefits? Who's accepted? Okay. So final expense is a life insurance policy which offers funeral coverage while being able to offer cash value to the policyholder. It offers financial relief, protects family from high funeral and burial cost. Easy to qualify, no medical exam required, simplifying approval for seniors and those with health issues. Guaranteed coverage, premiums are fixed and coverage is lifetime as long as payments are made. Flexible payout, funds go directly to the beneficiary and can be used for any final expense, medical bills, debt, or funeral. Peace of mind, provides immediate cash to loved ones when they need it most. One thing I like about final expense is it's a really inexpensive permanent life insurance. Permanent life insurance is whole life insurance, universal life, index, universal life, and variable and universal life. These are the life insurances that offer cash value to where after 3 to 5 years of making premium payments, you have a little bit of an income there that you borrow for like life expenses that happen, things that go bump in the night, crazy things, emergencies, 5-alarm fires, the worst of the worst, right? I like that personally because I have used life insurance that way. I had State Farm, and with me having State Farm, I was able to borrow at least around $3,000 more or less for things that I wanted to do, around 2020 to 2021, 2022. So, having that option was great because I didn't have to get a cash value loan at a bank or at a lending company. I didn't have to do a credit check. I didn't have to do an income verification. I just, had to ask my insurance broker, hey, can I get some income off of my, life insurance policy? And they were able to send me the documents of signing to get this amount of income off of my life insurance policy. And then they just gave me the money directly to my bank, which is cool. That's pretty much it. Typically, final expense is not that expensive. It's usually like around, can be as low as $17, and it can go up as high as like around $100, $150. You can definitely choose what's right for you. If this is something that you're interested in and you want to talk to your insurance agent or broker about. But yeah, like it's expensive, burials are expensive, having your wishes at the end are expensive, and it is expensive for your loved ones. And if something does happen to you while you're still walking around on this earth, it's really a good idea to like have a little bit of cash value there that's not tied into any sort of credit check or income verification. Because the way that things are right now and how topsy-turvy and crazy all this stuff is that's happening within the United States. People don't necessarily know if they're going to get a job, if they have enough money for rent. If people knew about these types of policies like final expense, maybe they have the money for, a down payment on rent. Maybe they might have the money for a partial down payment on a home. Maybe they might have the money that's enough to get a car, to get to be able to drive, etc. So yeah, if you are good and you have some income coming in, but you don't have a life insurance policy, definitely think about getting final expense if that's for you. Okay. So this is the end. This is the end, my friend. So if you've been on this profile in my webinar for a while, thank you so much for saying help support my business by buying me a coffee. Keep in mind that this is an educational event. This is an educational event. You do not have to buy me a coffee if you don't want to. But it's always a good idea, to help support me and my business to do so. But keep in mind, this is an educational event. You don't have to. Okay. If you want to make a appointment with me, you have personal questions to ask about your specific situation, you want to scan the QR code directly at the QR about the appointment, and you want to make your appointment like that. Okay. Let me see. I'm trying to make this somewhat doable. Okay. So yeah, you want to scan your appointment and with the code and talk to me that way. Okay. But let me go through all of these again. If you're not following me on Facebook, there's a QR code at the upper top part of your screen. Follow me on Facebook. Definitely take a look around at my website, crystal-insurance.com. If you want more insurance education, definitely follow me on Patreon. You can find that within my Facebook page. And if you need any of these, again, like the QR code for GoodRx, there you go. The help for the federal extra help and how to apply, there's a QR code there. If you're over the age of 60 and you need food, definitely scan the QR code and apply for the commodity supplemental food program. It's there for you. Definitely apply for that. If you are in the process of wanting to look around at what Medicare Advantage policies there are, you can scan that QR code to look at policies in your area. And if you are starting on the ACA side and you need ACA help, definitely scan that QR code down below so that you can see what policies are in your area as well. So that is pretty much it. Thank you so much for coming to my webinar. It was a pleasure seeing you, seeing if you have any notes or any chats, okay? So it was nice seeing you. If you popped in for a little while, thank you. And of course, I'll be doing weekly webinars like this every Wednesday and Friday. Now, keep in mind, I have to maybe adjust the hours for Wednesday because it's running into my Spanish classes. But yeah, it's every Wednesday and Friday around 11 a.m. to 12 p.m., maybe even 1 p.m., okay? So it's so nice to see everybody. You have a good time and stay safe out there, okay? Bye.